Bollinger Bands Squeeze indicator. The meaning of this, as we covered on the last one, by the way, I'm using TradingView, but I just want to be clear, you could use this on any trading platform. And you can do this for day trading as well, even though I'm using it on a daily chart. I'm doing this because I want to show you a trade I actually took. This was a real money trade. Also, this is a part 2 of a little series. But watch this one first, and then, because it's really not necessary to watch part 1 first, but if you want to get the full picture, I'm going to put the link to part 1 in the description below, and then go back and watch part 1. Okay, so the trade was this. I went ahead and I get my drawing tools up here. So I went short on this day. This was the 21st. And the concept of the trade was a Bollinger Band Squeeze. So a narrow range Bollinger Bands squeezing together. And then what we look for is the bands to expand away from each other. And that's your typical Bollinger Band Squeeze. And the traditional scenario is you wait for the bands to expand, and then you get in. And that would be your traditional entry, because this day, the lower band is still flat, and this is the first day that it's low. This is the day I got out. And if you want to learn how I got in early, how I knew to get in 2 days early, go watch part 1. Today, though, our topic is how to 10 times this winner. So exact same trade, but make 10 times as much money. And I'm going also to let you know that this will work for any trade setup. So we're using the Bollinger Band Squeeze here as an example, but I don't care if it's a turn trade, turn reversal trade, whatever kind of trade you're going to do, whatever setup. The point is just how can we 10x our money? So here it is, and let's hover over there. So the price you can see, we're going to just use even numbers for easy math. And let's say we got in, this is the math part of the video. So, if you want a video to go viral, just talk about math. That's a guaranteed formula for viral videos. But no, in all seriousness, I don't even care about that. I just, you got to know your numbers. Like they say, if you don't know your numbers, you don't know your business. Well, if you don't know your numbers, you don't know your trading either. So if we went short the stock at, let's say, $91, again, we're just going to use round numbers here. And then we got out here, say we got out at a pretty good spot near the low of the day. That'd be $85. So that's a $6 profit. And the important part is the percentage, which is actually very good, 7% profit. So again, we're rounding numbers just to give you the concept here. So 7% profit in 2 days is fantastic, right? And that's all that is, 2 bars, 2 days. So that's pretty good, but how could we 10x that? How could we make 70% profit in 2 days? And the answer is simple. It's not easy. I'm not going to pretend it's easy because it's not, but it is simple. And that is, instead of shorting the stock, trade the option contract on the stock. In that case, that would mean buying a put. And that's what I did here. So again, to give you the numbers, I was able to buy, I did multiple contracts, but we're just going to talk about one contract again, just so that the math is easy and you get the concept. So on this day, April 21st, I bought a $6 puts. They would just use one contract as an example. So it cost me $6. Okay, well, again, I'm not going to get on all the details of options today because I just want you to get the concept, but each contract is worth 100 shares. So that'd be $600. And then when I got out here, I was able to sell it for $10.30. So bought it for $6, sold for $10.30. That's the bottom line. So what is that? That's a $3.70 profit, which is a 71% return, as opposed to a 7% return. Yes, 10x your winners. Now, for full disclosure and transparency, and this is very important, there are a lot of nuances to options. Do not just go out there in the name of all that is holy. Please do not go out there and just start buying calls and buying puts instead of buying or shorting stocks. There is a lot more to options, and that's why I said it's simple, but it's not easy. So in fact, I'll offer you a free course, because I don't want anyone to get hurt doing this. Do not trade options until you become fully educated in them. They're a more sophisticated financial vehicle for sure. There are certain risks inherent in trading options, but the benefits are worth the education. I mean, if you can make 10 times more money just by trading the option on the stock, that's worth something at least considering, right? And like there's the URL to my free course that I'm going to give you, a free little mini course. And it's going to go into the details of all the advantages of options over stocks. I started out as a stock trader, by the way, and I've moved to options for this very reason. And also another reason is, even though they have a risk associated, well, everything does in trading, right? But so if you were to buy the stock for $91, let's say you bought 100 shares, you'd have to invest $9,100. So that's a lot of money. You might not even have that much money to trade with. But the beauty with the options is I only had to put in $600 at risk. And that's the most I could lose. I could lose all of it, but it's the most I could lose. And I can't remember the last time I've lost an entire option position. So that's very, very, very rare. In fact, I can't even remember any time it ever happened to me. So, but that is a potential risk. But again, that's, first of all, limited risk, which is always a great thing for risk management. And number two, you don't have to have as much money. And so that's what we call leverage. You're leveraging a small amount of money, only $600 instead of $9,100, to make 10 times more. And the best thing I can make this analogy to, there's so many analogies I could use, but one of them is real estate. You know, real estate has made many, many millionaires. Why is that? That's because they are using a small down payment of money to control a large property, a large vehicle, a large financial vehicle, but they don't have to buy it outright. And that's what an option is. Literally, it means it's an option to buy the stock. So you're putting down a small down payment. That's why it requires less money. Now, I rarely ever even buy the stock. I'm just getting in and out of the options. I'm just trading the contracts. And there's people who do that in real estate too. They buy and sell contracts on the real estate. But anyway, not to get too far into the deep end here. So that's it for today. Again, go get my free options course. It's literally at freeoptionscourse.com. There's 3 videos in there, 100% free. You enjoy it. And if you like these videos, please subscribe to the channel. Leave any comments below that you might have. And thank you very much for watching. I cherish your viewership.
What is there?